Hello guys, welcome to the stock session. Let me just move that camera a little bit there. There we go. Welcome to Solid as a Stock. Hopefully clear what we're going to be covering today. We're going to be looking at some stocks, looking at stock trades that we put on in previous sessions, looking at new, potentially new opportunities that we can take as well. So my name is Becky. My email address is there. It's becky@traddictiv.com. There's also support@traddictiv.com. So you can email us on either one of those emails if you have any questions or anything like that. By all means, please do reach out. There's also a link you can go to, which I'll bring up here. Link you can go to, which is tradewithufos.com/Becky. Now from this link, you can get yourself a free Trade with UFOs membership at the top there. And then you can scroll down and ask questions here in this public setting. Now, we prefer that because it means other people see the questions and they see the answers. So it's a place where the whole community can learn from this place, from each other's questions and answers. So if you feel comfortable to do that, please do that. Okay, I need to make sure that we cover the disclaimers. So let's make sure that we get those done now. There they are. Up in the top left-hand corner there, we've got the disclaimers up there. Please read them, not just for legal reasons, but also to understand that these kind of videos are demonstrations. Now, we are streaming in different places at the same time. So we are on YouTube, Facebook, LinkedIn, Twitch, other places as well. We are also streaming inside our closed coaching community. So basically we run, I'm just checking the chat boxes here. We run different, or we run the same session in different places. And then normally after about halfway through, which is normally when we've placed at least one trade within the arena where everybody's watching, we cut it off to the free streams and we continue in the closed coaching community. That way the people that are paying a small monthly fee to have access to the closed coaching community are getting more of our time in that closed environment, but also everybody that's watching, regardless of whether you're paying the monthly fee or not, you get the same content in terms of methodology is the same. We're not going through anything, you know, secret or anything in the closed coaching community. It's just that people have more of our time in that closed environment. They can ask their questions and things like that if they feel comfortable to. So we are streaming in different places. I have chat box up from different places. So I'll be looking around me just to see what people are asking. If you have any questions and you're watching live, by all means, please do ask questions as we go. It can help me to answer questions live in the moment that perhaps other people have as well. So please do ask questions if you have any. Okay. So it should just come up and explain very quickly what we're doing here. So we'll look at the current market environment, closed trades, open positions, and new opportunities. So we'll do all of that. Then we'll cut the stream to the free channels, and then we'll continue in the closed coaching community. Okay, so let's have a quick look, see what's going on. So we had a look at tradewithufos.com/Becky. I'm going to come across here to my chart. Now, these were trades that we put on last time, and I do have a list actually of different trades we put on just so we can go and see them. So we placed this one, which was Rollins, a stock that we placed, or a stock trade that we placed the last time we were on, which was 2 weeks ago, 27th of August. Now, as you can see, this black line was our entry. This red line was our stop, and then we had a target here and also a target quite far up. Now, as we can see, price never came back in. We never had an entry. It came very, very close, didn't quite touch the line, and then went off. If I make that bigger, it's really, really close, but easier to see if I do that. Price never touched that black line, which means we now need to look at this and say, is this still a valid trade? Would we cancel this trade, or would we keep it on and hope to get in another time? The short answer is we would be cancelling this trade, and a couple of reasons for that. Number one, climate is no longer on our side. We only place trades if we have probability either up or down. We're only going to buy if we have probability upwards. This was a buying opportunity. We no longer have probability upwards because the market's changed. The climate has changed. We no longer have a thick blue dot. We have a thin red dot. That tells us probability is shifted. We no longer have probability upwards. So just for that reason alone, we would cancel the trade. Another reason why we might cancel the trade, let's assume the climate was the same, is that the EMA, which is now there at 38.91, is now nowhere near in between our entry and stop. We no longer have the EMA lining up with our UFO. So we would just cancel this trade. So the trade that we put on last time, Rollins, we would just be cancelling. Never got into the trade, never won or lost. We just cancelled it because things changed by the time that we were looking at it. So Rollins is cancelled. We had RF, which was the symbol that we were looking at, Regions Financial. So let's take a quick look here. So with this one, it looks like it was a loss in the sense of price just went straight through it, but let's check this out. Okay, on the day that they entered, on the day that we hit, in fact, this one didn't even hit, the day that the trade would have been entered into was the 1st of September. On the 1st of September, the climate had changed. On the 1st of September, we no longer had probability upwards. We, in fact, didn't even have probability upwards the day before, 31st of August. So providing you check the markets once a day, you would have checked on the 31st of August, seen that the market had changed against you and closed the trade. Same on the 1st of September. You would have closed the trade before it entered. So again, this would have been a cancelled trade. Also, same kind of thing, if we go here again. On the 1st of September, the EMA was up here, no longer lining up. So again, for that reason, you would have cancelled the trade. That would also have been true anytime. We placed it on the 27th of August. That would have been true anytime from the end of the day on the 27th of August to the 30th of August as well. So this trade again would have been cancelled. We wouldn't have got in, no wins, no losses, cancelled trade. Okay, then we had MU as the next symbol, Micron Technology. So with this one, we would have, looking at when it entered, we would have entered this trade. Now the reason we would have entered this trade, let me show you. The day that price came back to hit our entry was the 30th of August. On the 30th of August, our climate was still a thick blue dot. We also still had the EMA inside the UFO. So we would have got into this trade. Now this trade would have worked out as a break even because price came in, it went up, hit our safety target, and then came back against us, eventually stopping us out, losing the other half of the trade at this point. So on the 8th of September. Now on the 8th of September, we actually had a change of climate. So depending on when you looked at it that day, you may have actually got out somewhere between the entry and stop, not necessarily at the stop, but let's assume worst case scenario. Worst case scenario, the second half of the trade was a loss. The first half of the trade was a profit. You made 50 bucks, you lost 50 bucks. You might have made $10, lost $10, made 1,000, lost 1,000. You made what you lost. So overall, break even trade, kind of neither here nor there. We didn't win, we didn't lose. We broke even in this trade. And then the last one we put on, RLGY. RLGY. This again is going to be a trade that we cancel. So I'm just going to show you why. Price is now here, 1768. It never came back and touched us. We placed it on the 27th of August. Price never came back and hit our entry. Price just went off from there. Kind of on its way back, but by the time it's on its way back now, we now have a thin dot, no longer probability upwards. The EMA is miles away, so we would be cancelling this trade, no longer in it. So of the 4 trades we placed last time, 3 of them were cancelled because as things developed, we no longer had probability on our side, so we cancelled the trade. And the final trade that we actually did get into was a break-even trade. So not really much to report from last week's numbers. Okay, so what we're going to do now is we're going to just check quickly our economic calendar. Again, I'm going to keep my eye on the chat boxes, guys. So if you guys have any questions, by all means, let me know on the chat boxes. So when it comes to the FX Street calendar, why do we do it? We do it because we want to see which days, in this case we're looking at stocks and we're looking at US stocks. So which days do we have scheduled news reports coming out that could affect the US markets? That's what we want to know. So we go to the fxstreet.com/economic-calendar. I've filtered here by US markets and by high impact news. Why? Because again, I want to know whether we have news coming out within the next week or so that could impact the markets and make them move erratically or increase volatility. So in the morning, this is all in Eastern time, in the morning, Eastern time on Tuesday, next Tuesday, we may have some news coming out, a scheduled report on the consumer price index that may cause a little bit of volatility. So we should bear that in mind, perhaps be out of the trades before that happens. That would be a more conservative way to do it. Perhaps reduce our position size. That would be a less conservative way of doing it. You could ignore this entirely and just leave your trades. That's a much less conservative way of doing it. but depending on how you are as a trader, at least you have this information. You can then choose what you would do with it as a trader. Okay, so now we're going to look at new opportunities, and what we're going to do first is we're going to come to top. Top is our platform that we use, and using top, what we're going to look at first and foremost is the overall market conditions. Now, I'm just going to group these so that these combine with each other. So we'll go back to the ES. And we've got a daily chart at the top here. Now, what I'm actually gonna do is we'll look at the daily. I'm just going to look at the weekly as well. So on the weekly chart of the ES, which is the futures contract for the S&P, basically a representation of US stocks, what we see here is our auto climate is showing us. In fact, if we perhaps just drag this out a little bit, we'll see it easier. Our auto climate is showing us a thick blue dot. So it's showing us probability upwards on a weekly chart. If we look at it on a daily chart, it is showing us a thin red dot, meaning not enough probability either way. So what I'm actually going to look at doing today is, rather than scan through looking at daily opportunities, we're going to look at weekly opportunities. So the trades are going to last a little bit longer. Instead of lasting a few days to a few weeks, they might last a few weeks to a couple of months. So that's what we'll put on today. And that's because, like I said, the general US stock market as a whole on a daily chart is undecided. On a weekly chart, still probability to the upside there. So we'll have a look there. So if we've got our weekly chart on the left-hand side, then we want our smaller chart, our edge time frame, to be the 144-minute chart. If you're using a platform that doesn't show you the 144-minute chart, no worries, you can use the 4-hour or the 2-hour, sort of something close to that. But for us, we're going to use the 144 minutes because it's a Fibonacci number. That's why we use that, and that's why we look at that time frame. So now we're not going to be trading the ES itself. The ES is the futures contract. We are going to be looking for different opportunities. So what I'm going to be doing here is using our scanners. I'm going to, so I'm just going to go there, open the matrix. I'm going to use our scanners to scan through the thousands of US stocks that they are. We're going to choose different criteria that we want to be filtering by, so that we can start seeing some decent trades. Now, some of these numbers that I'm plotting into this are, you know, arbitrary in the sense of minimum price, perhaps we say $15, maximum price, perhaps we say $300. You might have different numbers that you might put there. You might say, I want the maximum price to be anything. You might leave that blank and say, I don't care if the stock is worth $5,000. Okay. You might say minimum price, I don't care what the minimum price is. Or I want the minimum price to be at least 50 or at least 100 or whatever. I'm choosing 15 because I think anything really over 15 should have some institutional orders in there. If it's, you know, a stock that's a couple of dollars, it's very, very cheap, probably because institutions aren't as active in it. I'd rather be in trades where there's more volume and there's more institutional interest in that. So that's why I'm putting the minimum as 15. Max I'm putting as 300, just so that we're not looking at stocks that are too expensive and therefore pricing perhaps a lot of people out of being able to place these trades. But again, you might filter by different things and look at different things. Okay, in fact, let's go for 500, just because I don't want to cap too many at the moment. We'll keep the minimum average volume at 300,000 for now. We're going to look at US stocks, and we're going to look at stocks and ETFs. Now, you can filter by the sector or the group if you want to. Again, we're just going to be looking at the US stock sector. Now, we are looking for, and you can add different scans here and choose, you know, advanced scans, option scans. Again, we'll just leave that blank, and we'll be pretty simple with this. Then I'm going to come down to additional filters. Now, in additional filters, you'll notice there are stock filters, options filters, scan list to import scan list if you already have a watch list that you want it to look through. These are looking at Elliott waves, earnings, stock price range, and also climate. Now, again, I'm not going to be too specific with this. I don't want it to show me one stock and one opportunity. At the same time, I don't want to have thousands of stocks to choose from and not know which ones have the better probability. So for me, the ones that I care about most are auto climate and earnings. So with earnings, I might say, don't show me, so exclude stocks that have earnings in the next 5 days. Because if we're going to be getting into trades on weekly charts, in fact, we might even go a little bit higher than that, let's say 10 days. If we're going to be getting into stocks that have probability on a weekly chart, if earnings are coming out within the next 10 days, then we could still be in our trades. And then the earnings can affect the market and increase volatility. So we want to say, don't show me any trades or any stocks that have earnings in the next 10 days. So we're going to do that. Earnings exclude next 10 days. So we've got that in there. Auto climate, what we're going to do is we're going to say auto climate, we want the weekly, because we're looking at weekly chart. Weekly, confirmed up, sensible, and close to the 9 EMA. Now, for those of you that know our strategy, you'll understand why we're doing that as we go through and I expand on it a bit. For those of you that don't know the strategy, it should start to become clear as to why we're looking for that. Now, what we'll do is we'll scan, and if we still have maybe hundreds of opportunities coming up, we might come into this and be more specific and sort of narrow it a little bit so that we've got fewer or a shorter list to look at. But let's see, I'm going to press scan now, and then we'll see. See here, we've got a list. I think that's a fair list. What's that? 20 or so, maybe 15, 20 stocks to be looking at. So what we'll do is we'll just click through each of them, see what probabilities we have, see if we have opportunities, and take them. What I'll do, rather than spend my time at the start explaining why I'm taking opportunity or not, I'm going to look through, explain quickly why I wouldn't be taking an opportunity if I wouldn't, and then if we do have one, I will then expand on that and tell you guys exactly what I'm doing. So for those of you that are veterans and you know what we're doing, you're not waiting 20 minutes of an explanation before you get a trade. And for those of you that don't know quite what we're doing yet, you may see me skip through some stocks quickly, but then when I actually get to placing a trade, you should understand why I didn't do the trades before and why I chose that one. Okay, so what I'm going to do, I'm going to just group this so that we're looking at the same thing. See, each of these windows have a little yellow box, and I'm going to click that one, which is the top one, QCOM. There we go. So which is Qualcomm Incorporated. That's the stock. Now, by the way, I was looking at stocks that had probability on a weekly chart. Why? Because if the S&P as a whole, so the stock market as a whole, has probability up on a weekly chart, and the individual stock that we're looking at also has probability up on a weekly chart, then they're correlated together. Then they are likely to be having sort of decent opportunities because they've got correlation on their side. The individual stock as well as stocks as a whole. If stocks as a whole were going up and the individual stock we were looking at was going down, it might be that the tide kind of brings it back up again, or vice versa. So again, correlation is important there. Not crucial, but important. Okay, so looking quickly, what I'll need to do is just add a quick study here. I need to add my moving average. Where am I? Moving average, and we want to make it an exponential moving average, a 9.1. Okay, there we go. There we go. So we are now looking at our left-hand side, which is a weekly chart. We have our auto climate. That's telling us where we have probabilities. For the time being, it's blue, telling us probability up. We have our EMA. For some reason, it's not showing. Let's have a look there. What's that? It's on the chart, but it's not necessarily giving me a price. That's probably me doing weird about that. Okay, so oh, there it is. It's because it's right at current price. That's why. So if you just see that there, see we've got that grey box that says 143.89, and just underneath it you might see this. If I really squidge out that red box there, it says 143.849. It's because the EMA and current price are so close that those boxes are overlapping. That's why we couldn't see it. So very quickly, we would not be taking this trade because the EMA doesn't line up with the UFO. Those of you that follow our strategy know what I mean. What we'll do now is we'll come back to the matrix, click on the next one, and see what we have in perhaps other opportunities. So here we have the World Wrestling, is that Enterprise or something like that? So WWE is the code there, or the symbol. So here we have, we won't have an opportunity here either. And that's because the EMA is not enveloped. The EMA is here, 51.80 something. So EMA is round about there. UFO is underneath us. So not enough probabilities. Again, once we get to an opportunity, I'll expand and explain to you what it is that we need and why we would have disqualified some of these trades. So 26.23, nope, okay, so same thing, EMA is not lining up with the UFO. No bother, we pick a new one. This is why it's great to do things with scans, because I'm not having to look through loads of different charts of loads of different stocks that I have on a watch list telling me what I should be doing, or telling me whether I should or not, and looking through everything. I'm just looking at a scan, looking at the chart quickly, looking at the technology I have in front of me. Is it lining up the way I want it to? Yes or no? If no, I go back to my scan, I click on the next one. There's no bias here, there's no subjectivity. It's just using data, using the objective data that we have to filter through. So here, 30.32, so again, not lining up, no problem. We'll just keep going until we find one. CCK is the next one, so Crown. I can't even read that one. Crown. Again, we're having a lot of trades very close to their EMA. Well, I did want it close to an EMA, so I guess I'm getting what I asked for. Let's see. That's actually moved. A few of them have moved. What I'm going to do is I'm going to filter it by the symbol. So we might go over some of them again, but by filtering it by the symbol, they won't move up and down. So ARCC. No, we don't have a UFO lining up with the EMA. I think it's still loading for now, so I'm just going to let it finish loading, just in case anything new pops up. Nope, nothing lining up there either. BMO. Bank of Montreal. No, again, looks like we don't have the EMA lining up with any UFOs, so no problem. What we'll do, if we go through all of this list, we've already looked at CCK. If we go through all of this list and we can't find opportunities, then no problem. We'll go and look at some FANG stocks, and they might be further away from current price, but we'll still perhaps look at some trades. Looks like... No, we don't, unfortunately. I was going to say looks like we have a trade, but I don't think we do. It's that 115.83, just not, literally just by a few cents, but rules are rules. So unfortunately, not lining up there for the Canadian Imperial Bank. CONN, that's the next symbol, cons. Nothing lining up there. DCP is the next symbol, DCP midstream. Nothing lining up there. I'm just going to smash through these as quickly as I can. FAF, First American Final, that looks like, or Financial. Okay, nothing there. In fact, actually, we have sell orders on top of us, no buy orders. Let's just wait for it to finish. No, close but no cigar, as they say. Close but no opportunity there. HBAN, Huntington Bunch. Do we have one there? 14.99. Yes, we do. There we go. Finally got an opportunity. So I will explain to you why. Then we'll go and place it on TradingView. And this will be the trade that we put out to the world, to the free sessions. We'll then just carry on looking through these scans and looking for new opportunities in the closed coaching community. Same methodology, same reasoning. We're just going to be looking at more opportunities because we've got more time in that group. Okay, so first things first, when we trade, we want to know, do I buy, sell, or do nothing? That is the first question we should be asking ourselves as traders. We use AutoClimate, which is a free app on most platforms you can use it on. If you want to get it, then get yourself a free Trade with UFOs membership. Go to tradewithufos.com/Becky. And then once you've got your membership, you can then go and download AutoClimate for the right app that you want to use it on, the right platform you want to use it on. AutoClimate scans through market data and tells us with these series of dots where we have probabilities. So if it's a thick blue dot, like that one is, and ignore the line for now. If it's a thick blue dot, that tells us probability is upwards, meaning we should be looking to buy. If probability is upwards, why would you sell? You want to buy when you have probability upwards. So AutoClimate is telling us probability is upwards. If it was a thick red dot, that would tell us probability downwards. If it's a thin dot, like these, doesn't matter the colour, but if it's a thin dot, that tells us probability nowhere, do nothing. So we answer this question with AutoClimate, and that question is telling us buy. So check, right? We've got that as a check. We've got probability up. Then we want to know, question number 2, if I buy, where? Or if I sell where, in this case we're buying, so if I buy where, that's where these guys come in, our AutoUFOs. AutoUFOs, again, also a technology that helps us be objective, that helps us to see precisely where we have probabilities. UFOs are showing us where are the buyers, where are the sellers. Now that's important because the only way price can go up is if there are more buyers than sellers. The only way price can go down is if there are more sellers than buyers. So by seeing where big stacks of sellers and big stacks of buyers are, shows us areas where we're likely to have probability that price goes in that direction. So if it hits a bunch of buy orders, hits a bunch of buyers, we would expect price to go up from there because it's hit a bunch of buyers. Now, not always. You might have loads and loads of sellers at that point that happen to come in. And okay, if we're wrong, we're wrong. We'll manage our risk. But we at least want to be placing our trades where we see probability. And that's where these UFOs show us. Now, you might be thinking, okay, well, hold on. Well, we had that on every chart we've just looked at. And we had these on every chart we've just looked at. So what's the problem? Remember I said about the EMA. The EMA, it's our 9 exponential moving average. What that means is, I'm just going to write this down. So you've got exponential, I think I spelled that right, moving average, or average. So it is an average of price over the last, it's a 9-point EMA, so over the last 9 candles. So over the last 9 weeks, what's the average of price? And that's what that number is. That number is what the average of the prices were over the past week or so. It's exponential, meaning it gives slightly more weight to the more recent ones. But more importantly, it's moving. It moves with price. If price goes up, so too will the average. Because it's got new data to then be calculating and moving with it. So we have an exponential moving average. It's important because, I'm just going to use a different color to highlight it here. It's important because if you are most hedge funds, not necessarily most, but a lot of funds will be just using averages to get in and out of their trades. They're not necessarily so specific. Also, loads of traders all over the world, retail traders all over the world, will buy and sell at averages. So they're using this as a reason to get in or out of a trade. If price is above the EMA, so currently price is here and the EMA is here. Price is above the EMA and then comes down, the rule says buy it. It's what lots of people are doing. If it was the other way around and price was below the EMA and came up, you'd sell it. In this case, we're buying it. So what we're saying is we have an upwards climate, probability upwards. We have buyers and more buyers. So buy, check, check, check. That's why we ruled out trades before, because the EMA value was not lining up with the UFO. We want that number, this number here, to fall somewhere in between one of our UFOs. If it doesn't, we don't place the trade. So in this case, it does, hence we're now placing the trade. Because as we can see here, the EMA is 14.99. So just in there. So the EMA is at this value, which is just in between these two. So that's the trade that we'll place. Okay, now for this last bit, I'm going to go to TradingView to actually place the trade. Just checking the chat boxes, seeing if anyone's got any questions. So I'm going to go to TradingView to actually place the trade, just so you can see a different platform as well. And TradingView is obviously very widely used. So we were looking at, I don't even remember the name of the stock, HBAM. Now some of you might think, hold on, this is ridiculous. You don't even remember the name of the stock. What are you doing? Now, the reason why it doesn't matter is because I'm not getting into the stock based on fundamentals. You guys might have fundamentals as part of your reasoning, as part of the things that you do. That's fine. But for us, we're looking at the sort of statistical data, the technical data. That's why we get in and out of trades. So for me, I don't really need to know much about the company. I don't really need to know much about the, the individual goings on, or even need to remember the name of it. All I need to know is, does it have the right things going in its favor technically, statistically, to give me good probabilities? If so, great, I place the trade. If not, I won't place the trade. So what I'm going to do, I'm going to just come back to the top so we can get these numbers. So you see here, this says 15.09 to 14.86. So our entry price is going to be 15.09. That's the entry. The UFO has given us that. That tells us that's the first price where we have buyers. So 15.09, that's going to be our entry. Now our stop loss was probably going to actually be underneath this one. The reason for that is because the smaller number there is 14.86. Now what I tend to do is round down by 10 cents. So the stop loss would be 14.76, and that happens to fall just within this UFO. I don't want to be getting out within other buy orders, right? Because if I'm buying to get in, I would be selling. If my stop was there, that would be my stop to get out. Why do I want to sell in amongst lots and lots of buyers? I'd rather have my stop loss just underneath that stack of buyers. So I'd have to be really wrong in order to lose, right? So my stop loss is actually going to be taking this number here, 14.72, and rounding down by 10 cents. So it's 14.62. So 15.09 and 14.62. I'm going to make a quick note of that here. So it's 15.09 and the stop loss is 14.62. Great. And then I'm going to go back to TradingView. And what I'm going to do, I'm just going to draw using my Fibonacci tool. For those of you that use Fibonacci as it was intended, I do apologise. I know I'm not using it as it should be. I use it as a drawing tool. I don't use Fibonacci myself. Not to say it's not a good thing to use. I just personally don't use it. I use it as a drawing tool. So all I've done there is just drawn those numbers so that I see the black line is my entry, the red line is my stop. Now we want to figure out, what if I'm right? Where am I going to take my profits? So the first target is always 1 to 1 away. What we'll do here, if we just connect to paper trading for now. There we go, cool. So my safety target is always 1 to 1 away. Why? Because then if price goes somewhat in my favour, but not all the way in my favour and comes against me, then I'm going to make half of my trade and then lose half of my trade and break even. So it protects me if I'm a little bit right. If I'm very right, let's say I have a target up here. If I'm very right and price comes and does that, then I'm going to make my safety target and I'm going to hit my second target, profit, profit, fine. It reduces the overall profit because you've sort of taken it in stages, but you're still at a profit. And then of course I could be entirely wrong and price just goes straight against me and I lose. That's also possible. In this case, or in every case, we put a safety target in so that if we're a little bit right and then wrong, we protect ourselves. We don't lose anything, we don't make anything. Now what I'm going to do is just come back to the top as well and put in my AutoUFOs on the left hand side. Okay. So I can see if I have any opportunity to take profit. I don't. I'll explain in a minute what I just did and why the answer was no. So what we'll do is we'll put the safety target in first. So all I'm going to do is type in the entry, which is 15.09, type in the stop, which is 14.62, and then I'm going to put for my take profit. You see how that worked out, that it was 47 ticks. So 47 of the smallest increment of price. So 47 again. All I've done is copy that over. That number is now 1 to 1 trade. That's my safety target. And the number for that, I'll put that there. Number for that is 15.56. So that's going to be my safety target. Now I risk $50 for each side of the trade, so $100 overall. That's just because it's a nice round number, easy for you guys to halve, easy for you to understand what I'm doing. You might have $10 as your total risk, in which case $5 on each. You might have $1 million as your total risk, in which case $500,000 on each. That's up to you, depending on the size of your account, how much money you have in there, how you feel about risk and things like that. This is assuming $100 total risk. Going to check all the numbers make sense. I'll click buy, and there we go. First half is in. Now what we're going to do is normally what we would do to place our second target, which is where we're going to try and take the most out of the opportunity. What we would do is we would look at the UFOs that are on the left hand side. So let's say we had a red UFO sort of here. Let's say that was at 1845, say. If we had a red UFO at 1845, then that would be where we place our target, because we would be saying we want to capitalize on the movement to the upside. What's going to stop a movement to the upside? Bunch of sellers. So we want to get out where those sellers are on the bigger time frame. But there are no red UFOs, there are no sell orders that we have here on our weekly time frame for this. So what we'll do is we'll put in a trailing stop. So what that means is we'll have the same entry, 15.09. We'll have the same stop loss, 14.62. We'll risk the same, $50, but we won't click take profit. And then what will happen, I'm just going to put that in. What will happen is if we're right, so price comes in, hits our entry, starts to move off, hits our safety target, moves along the way. Let's say at this point, a new UFO forms. Okay, so new UFO forms. What we do is we'll take our stop loss from here and we'll put it here. And then let's say a new UFO forms up here. And then we just take our stop loss from here and we put it there. So we're going to trail our stop loss behind UFOs so that we lock in profit as it goes. So I'm just going to make a quick note. So we placed this, so placed on, what date is it today? The 10th of September on the live session. And we have T2 as a trailing stop. Okay, cool. So that is the first trade that we've put on today. So that means we are going to stop the stream to the free streaming services, and we'll continue in the closed coaching community. So for those of you that are in the closed coaching community, give me a second. I've just seen a message there from you, Steve, in the chat box there. So we'll go and look at those stocks in a second. So give me a sec. I'm just going to cut the streams to the other destinations. For those of you that have been joining me on the free platform so far, hopefully you found that useful. We've placed a trade. We've explained why we placed the trade, where we get this data from, how it all works. If you have any questions, you can email me, becky@traddictiv.com, or go to tradewithufos.com/Becky. Get a free membership at the top there, and then ask questions in this public space, which obviously is then good for other people to see. And yeah, let me know how you get on. Email me any questions. That's absolutely fine. Have a great end to your trading week and a great weekend, and I'll see you guys next time. And for those of you in the closed coaching, give me a sec.